This is a broader trend. To have integrity, you need to have alignment and be integrated in presenting all different parts of your life.
Welcome to The Alternative Investor, the definitive show for investors seeking private alternative investments. Here's your host, Matt Johns.
Today, I had a fantastic conversation with Julia Valentine and David Friedman, two prominent visionary leaders in the worlds of technology and ultra-high net worth investors. It wasn't long before we got to the heart of things, discussing faith alignment and finances. Bottom line is, we had a lot to talk about. Now, Julia is seeking to create impact. As a tech and investing expert, she was recently named to the Forbes Tech Circle. Currently, she runs multiple businesses she founded: Alpha Mill, Family Office Alpha, the Digital Evolution Institute, and most recently, Athlete Legacy Circle. Julia previously served as the Chief Technology and Operations Officer at a $110 billion pension fund, and in various roles at top-tier financial institutions like JP Morgan Chase, D.E. Shaw, PGIM Investments, HSBC, and a prominent family office. David is a tech, data, and high net worth investor expert. He currently heads his consulting firm, Friedman Ventures. He's the co-founder of both Wealth Quotient and WealthX, the world's first global wealth data and intelligence platform. His expertise in the ultra-high net worth market has been featured in prominent publications like the Wall Street Journal, New York Times, and Financial Times. He's also appeared on major news networks including the BBC, Fox, CNN, and Bloomberg. In our discussion, we dive into the evolving landscape of high finance investing, technology, and financial values alignment. Welcome to my conversation with Julia Valentine and David Friedman.
I think where we are today, which is exciting in the faith-driven investment movement, is, or values-driven investment, is portfolios and investments now beyond philanthropy and impact investments are in particular now becoming an expression of a person's individual values and beliefs, right? So it's another area. I was philosophically thinking, you kind of opened the door, by the way, so I'm going to pontificate. You opened the door for the question that I've been asking, which I was just at the Kingdom Advisor Conference in Orlando and saying, well, why?
I was too.
Oh, yeah. Okay, cool. The question was, so you were there. Why is it that financial advisors are not having, why is it that the financial conversation is so siloed from the rest of someone's belief systems? Although, ESG has kicked up and created a lot of awareness around that, right? So, and then I thought, well, gosh, is this a philosophical and intellectual inheritance from the Renaissance and the Enlightenment? I mean, where the Enlightenment, as you know, tried to bracket religion, and because religion had caused so much war in Europe that they said, if we can just come together and reason together, unfortunately the French Revolution was not that way, right? So it turned to, so then I said, no, it's not an intellectual legacy of the Renaissance. The dichotomy where financial services, like other areas of our life, like the public square and stuff, are directly, come directly intellectually flow from, Rousseau and the Renaissance, and then you get to Nietzsche and so forth. Financial services was not that. The conclusion I came to, and I don't know if you did too, is that it's not part of the conversation. That an advisor, it's not part of how an advisor engages their clients. So it's an educational thing, and people are focused on returns, right? So I think there's two things. So it's education and tools, right? So I think that's Kingdom Advisors doing an incredible job, I think, of providing resources and tools to change the mindset, to educate and give people. So I did my own little laboratory experiment. There's a gentleman who's in New York who's an advisor. So I asked them that question. I said, you're very passionate about your faith. You have mostly Christian clients, for example. So is this part of your conversation? And he said, not really, right? And part of it is he didn't have products to offer them. I think the thing that's most important about this is to say this is a broader trend of, to have integrity, you need to have alignment and express and be integrated in presenting all different parts of your life, right? So family offices have been doing impact investments. And as you know, the next gen of family offices are driving KPIs around performance and impact. And you've got return on impact, and you've got, Tim Tebow's doing a great job at kind of pronouncing MVPs, most vulnerable people, but also, so the thing that I started asking a lot of my relationships in the family office space is you're doing such calibrated precision work on the impact side in philanthropy, and we've come so far. What about your liquid portfolio that's being managed at, this private bank? And the answer was, yeah, I think not sure it was surprising to me that some of the big families who are so far advanced. So it's not on the radar screen. It's an educational thing. It's a mindset thing, right? Some of the big platforms launch indices, which is something I'm involved with Bountiful. And as we launch some of these flagship benchmark indices that will then enable and create the infrastructure for investment vehicles for the person that's in the pew, if you will. And versus today, you can actually do, there's enough technology platforms and what are called direct indexing platforms out there that if you're someone of faith or your values, you can sit down with your financial advisor and carve that out. You can do that today. It's not that it's not available, right? So, sorry, you opened it up, and I.
No, you took it and ran with it in a great direction, Julia. I know you're just chomping at the bit because you have a lot to say about this too.
I have questions. I am idiot. I'm just going to be a fight about it. But, my first question to both of you is this. Do you think that ESG was an attempt to do kind of a polite version of faith-based that everybody could potentially agree on? And do you think that people are disappointed in ESG to a point where something else can show up and spread like wildfire?
It's a great question.
I feel very passionately about that. It's a
great question.
It's a great question. Yeah. It's a good way to frame it.
I feel very passionately about that because I think that in many ways, people had this great ideal set forth, right? With what this ESG movement was supposed to be. And it was set by a few people up top. And because there have been all these barriers between our investments and what we actually saw behind where our dollars were going, nobody really understood. But now that veil has been pulled out a little bit, we're starting to see. And then people are saying, hey, I agree with 75% of this ESG thing that I'm in right now, but there's 25% I'm not so sure about. So now that I've pulled the veil away a little bit, I need to see what I'm doing with the full amount of my investment. And we're just now kind of figuring out what to do about that maybe. But that's just my humble opinion, that there seems to be something that's an awareness, much to your point, David, that there's an education piece, but it's almost this awareness that we've kind of stayed behind the wall. We've been okay with that. We didn't want to know where our dollars were going, what they were supporting. But now that we know, we got to do something about it. So, I don't know, David, what do you think?
I think it's a great question. I think I don't have a data, so this is all anecdotal for me, right? And just a layman's observation. I feel like the ESG movement was more driven from the top down. The faith-driven, values-driven movement that we see is percolating from the ground. It's from the ground up. And when I say ground up, it's actually more the financial advisors themselves. People don't even know that they have it as an option today, right? Like they're not aware. But we saw a massive kind of backlash, right, against but having said that, what I know now is that within the big index providers, for example, values-based investing and religion was a subcategory of ESG, really, right? Or, so they were kind of, you're right, Julie, they were kind of all together. I think it's raised a lot. I think it's done good in the sense of it's raised a lot of awareness. And now people are saying, oh, well, it's like they didn't even know to ask the question. And now they're asking the question, is my portfolio? So this is the key question that this question I think is going to continue to gain momentum. Is my investment portfolio on the liquid side? Let's talk about that really and be very specific, aligned with my values and my beliefs. How do I even figure that out? And if it's not, how do I align it? What are the products and tools that are out there to help me do that? and at an infrastructure level, right?
Mhm.
So I think it's exciting because it's going to give. I love this. I love this specific topic and area because everyone has a right to decide where their money goes, right? And that's something I think everyone. You may disagree or agree. You may agree or disagree with someone and what they're investing in, but I think everyone would say you have a right to do that. Like I think everyone would acknowledge kind of the universal claim that if it's your money, then you have a right. You get to choose that, right?
Mhm.
And in the industry, there's always been what are called exclusions, right? So negative exclusion of stocks.
Mhm.
Now everyone's leaning into kind of how do we affirm the positive? How do we affirm the positive companies that are doing things? And then what about controversies, which, in terms of, and then lastly, what I hear a lot about proxies. So showing up and having an influence because you're a shareholder and being able to share your opinions. And I know that that's a strategy that a lot of in the faith-driven community are looking to leverage and use. So it's also interesting. It's also fascinating in that, as you know, probably from a Catholic perspective, there's a very centralized structure of guidelines and centralized religious
Yes.
structure, which makes it a lot easier to launch S&P has a Catholic index, right? So they could do that
Mhm.
because those guidelines are pretty public and, they have a Sharia one.
Easier.
It's easier. Sorry. It's easier. That's a better way to put it. It's
Mhm.
easier, right? And Sharia law is a little bit easier. The evangelical community is kind of all over the place, right? So there's no
Hmm.
way. There are core elements, but there tends to be a diversity in that community, of which I would consider myself a part of.
Mhm.
There's a diversity because there isn't a centralized religious structure, right? So that's part of it, but that also creates a vitality and an energy and a dynamism to that market as well. So.
Now, Julie, what have you noticed in that regard? You're always working with ultra high net worth and family offices and folks with plenty of means. What are you seeing in them and their desire toward, I don't know, be it ESG or something else, in any kind of impact investing?
This is such a great question because we just had a conference in January of this year and we talked about impact. So we had a speaker go through, what is impact? How do they look at impact? And these are some of the really well-known names in the family office space, right? Household names that we would recognize. Not a word was mentioned about faith-based. So I don't know if that and by the way, I just didn't know any better to really ask the question. Now by the end of this conversation, I'll be getting a crypt actually in my hand and be like, hey, what about this? But I don't know if that just wasn't the structure and the mindset, that just was a function of that particular presentation. Or is it really the fact that the faith-based is going to be a bottom-up movement? In other words, it's not necessarily going to come, the demand might not come from the family office space necessarily. It might come, you know what I'm saying? Like, I'm not making it, it's not a statement. It's more of a question and a thought. So
Do
where is
you
it going to come from?
do you think there's more of a professionalism in that area where people feel like they need to keep that barrier of keep religion and politics out of this conversation of finance?
I think as a society, we, to be on the safe side, we keep religion and politics out of a lot of conversation. That's just like our
Just in general.
fault, kind of. No, I mean, tell me if you feel the same. I feel like in most of my conversations, until unless it's my like closest friends and family, and even then, sometimes it's just like for the sake of peace.
Yes.
And you kind of like, okay, here's who I am and here's what I believe, but I'm not gonna necessarily lead with that. But I'm also someone who I literally have friends who are like on opposite ends of the spectrum and not like the center. You know what I'm saying? On the
Yes.
Yeah. So I have a lot of friends and I speak with a lot of people. And so I would not, I would probably err on the side
Of
of just
course.
keeping it out.
Well, I think a lot of people probably agree with that and feel the same way, that they don't want to enter into that unnecessary discomfort
It's
with those kind of conversations.
but I think it's a conflicting impulse because on the one hand, advisors are trying to move away from just they're trying to justify and they're battling fee compression, and they're trying to justify their value. So there's not one advisor I know who's not trying to talk about philanthropy and impact and legacy of your family, which deals with your values and running and providing extra services around that to build out so that they're not just charging a fee for a couple, if they're not actively managing the portfolio. So to me, it's a natural progression for a financial advisor to say, what are your values? Oh, you haven't thought about that? That's a huge value proposition. And let's make sure that at least this part, it reflects what you've done, So if I was a financial advisor, I'm not, but if I was, I would be gravitating to this as an underscoring and differentiating me a value proposition with my clients right now. So why the question is, again, going back to everybody in the room, that when we were there at the Kingdom Advisor Conference, why aren't they doing that? There's also a risk. And that's what that's what you guys are highlighting right now. There's a risk because you bring it up and they're like, well, I just want you to get me the return I want. Right. So what's the upside? The upside, it's a calculated risk, right? There's a downside, which is they get upset and say, well, now at the end of the day, the reality is most data shows that a client doesn't leave because of the performance of the portfolio. It's about the service and the value and the relationship, right? So typically.
I think that there is a place for it. I think that there is at the very least, right? It's worth a conversation. And then if the person says, no, not interested, that's not going to be part of my portfolio allocation. Okay, great. Like that's, they're just not interested. I think that some advisors are going to get into that full time and be like, this is what I do. And I'm known for that. And it's really, really interesting that for years I've been subscribing for Buddhist magazines. And on the back of every Buddhist magazine, there's one and the same wealth management firm that's been doing this for at least 25 years. Okay. And they're like, you're reading a Buddhist magazine right now. Like, shouldn't your investments be consistent with your values? So I've been looking at that, so it's definitely been there. And some people are going to make a name, for themselves in that and be consistent with that. And other people will say, like, are you interested in allocating fully or partially?
Yeah, I think that's right.
Right.
I think there'll be passionate early adopters. It's like any adoption of any other product.
Right.
There'll be passionate early adopters. They're at an institutional level, though. We're already seeing this happening, right? Like, so institutions, large family offices. I think that the Joe in the pew doesn't really have that option yet because they don't have an SMA account or but if they did, they probably would, right? Because you think about what we're seeing with the rise of democratized stocks like Tesla and what Elon Musk is doing, right? It's a structural shift in the performance of a stock, right? So based on kind of the community that's created. So all these things I think are converging to push this forward, but
they definitely will converge because it seems that there are so many internal inconsistent. But you know what? A product or a movement is great in as much as you can squeeze internal inconsistencies out of it, which ESG on some level was never able to squeeze that out ever. Right. So at the end of the day, everybody was like, how come oil and gas companies are getting the highest ratings? Like you know what I'm saying? And I'm not against oil and gas companies, by the way, for the record, okay? I'm not against any company. But on some level, it was almost like whoever was paying to get the ratings was coming up with the highest. and so
Right.
and so my first question is like, in a faith-based fund, is an oil and gas company, is that like a good company? Is that a bad company? Like, you know, how do you look at that? Like, how do you even make that kind of evaluation or judgment? Like, how do you put this in a faith-based fund, David? Do you know?
Yeah. I mean, listen, it's really fascinating trying to translate kind of theological doctrine into. It depends. There's so many nuances, so it depends on. I saw an interview with, I think he was with the Vatican Bank about the recent conference last fall in London, and one of the reporters had said, "Well, how do you deal with nuclear energy?" And I love the response. The gentleman, I forget his name, but he said, "We're focused on the procedure and the structure, and for a local parish in France, nuclear energy is going to be pro." Right. And in Germany, it's going to be against, because those are the nuances geographically. Right. So their answer to that was they're creating a framework and a process that will be evaluated that does take into cultural nuances. It depends also. There's so many different layers there. It depends on the issue. Like no one's going to oppose being anti-trafficking. Like, that's going to be an issue that universally everyone agrees on.
Yeah.
How it gets translated and how you deal with the data, that's a whole different question. But I think that one of the cool things about Bountiful, which is the company that I'm working with, is that the founders came out of some of the top index providers, and they know what it means to run a governance structure and incorporate what they call the lived experience, or what we call lived experience. So it's not just armchair financial philosophy and theology. It's like a community that is living it out. So the short answer to that is the translation from kind of those frameworks into portfolios is a process. There's not a silver bullet. Now, there are lots of issues that are pretty, depending on the faith community, you can check the box and say, listen, they're not going to support that. But think about alcohol. Let's take alcohol. It's a fascinating subject, right? If you're a Protestant, conservative Protestant Christian, or evangelical, let's just kind of lump those together, although the truth is definitions are challenging. But the reality is you're not against alcohol, and scripture is not against, the Bible is not against alcohol, but you're against addictive behaviors, right? So if 80% of the revenue of a company is coming from 20% of the consumers who are addicted on, so there are nuances like that, right?
Wow.
But the other big, huge aspect is the data. So what data can you get? You can get revenue data, but can you do attribution? What kind of data can you get to support it? And so that it's objective and quantifiable, right? So there's different elements, but the way that Bountiful is going about this is we have councils within different faith verticals and communities, and those councils are responsible for defining the frameworks, and then those frameworks then get translated into portfolio selections. And not only, and it's not a one-time thing. It's something over time, because if you think about marijuana, right? Laws are changing, right? So just because it's legal, does it mean you're still going to support it, right? Or so that's part of the lived experience. So the short answer is there are certain things that you can check the box on and exclude depending on the faith community. The nuances, the best way to deal with the nuances, though, is through a governance structure that of for example, a council. And this is how the indices do it internally. They have their own governance structure and council member, like council that they hold. So in the case with Bountiful, they're just kind of outsourcing it to us as a platform, for example.
I would like to start a fund that's called I've Been Around Fund. This is sort of where, like for people who, we've been around. Sorry, ignore me. I'm just
You gotta create the index
the
first, and
index
then
of
have
having been around.
and then the ETF on top.
A lead ETF on top of it. Right. So, David, what have you seen in the family office world, in the ultra high net worth, investment world? What is your sense for family offices, families, stepping forward and saying, like, here's what I'm going to do. Like, I like this.
Yeah, I mean, you and I both have seen on the philanthropy side, super hyper aware of impact, right?
Yeah.
So
Hi.
I think
Yes.
I would say, and I think you would agree wholeheartedly with me, the biggest catalyst in the family office space for this is going to be the next gen, because they really care. I think the first gen who was making the money in many ways lived dichotomized life. Like it was about making the money, and here's my family over here,
Yeah.
and now I've got to set up a private foundation because I've basically alienated my kids, and now my advisor's telling me philanthropy is the way to build my family back together. The kids are have a more integrated view where they're kind of saying, listen, we're not going to invest in that company where we don't care. We care about returns, but we care more about whether this is aligned with who we said we are. So I think the next gen is going to provide some nitro, to the engine on this, because they do care about it. Impact is the lens that they're using, right? And they're less about the performance, I would say, in most cases. This is in most cases. I'm making a generalization. So I think on the family office side, I think for the families that are family offices that are kind of newer, vintage, if you will, they're still probably looking at, how do I incorporate the liquid side? On the philanthropy side, of course, it's aligned with their values and impact. They're investing out of their private foundation, which is, their legacy and all these things. So my gut is that the private banks and the big platforms and the multifamily offices currently today, they're all about legacy and impact investment.
Yeah.
This is going to be another arrow in the quiver. By the way, we talked about your values. We're now doing this private foundation. So the money in your private foundation we don't want to kind of have a dichotomized view here, because we said, here's our values. So your money in your private foundation, we got to make sure that's aligned. It's the other part of the balance sheet that's being left behind typically today, right? So, I think we'll see it play out that way. It'll be another tool in the conversation that quickly could be the tail that wags the dog, if you will, on the liquid side, right? The other big one are corporations, right? So you have corporations that have very strong. We're seeing the rise of this in the U.S., obviously, like with companies and leaderships and employees, right? So giving
it seems
employees,
like more so in the last 4 or 5 years, it's really amped up.
It's amped up huge, and so I found that my conversations at Kingdom Advisors, when I talked, it was really about advisors and SMA and direct investing, but I would say, well, what about the employees at these big companies where the founding families are strong Christians, right? Mm-hmm. And I'm finding that or what about universities, Christian universities, or, you could go the other way, like the Catholic. I mean, the Catholic, I would say on the Catholic side, they were way ahead on this, because they could be, I think, whether you're Catholic universities or institutions or institutional capital, right? Versus, say, the evangelical side of it. I mean, Sharia has always, Sharia's had strict guidelines around debt and other things. And, Sharia, when I was at CB Richard Ellis in the early 2000s, I tried to launch the first Sharia compliant real estate product, but I was a little early.
So, in addition to next generation, there are new numbers about the wealth transfer.
Women.
What are you seeing?
Yeah.
There are two interesting things, right, in this trend. The first one is that the wealth transfer is way bigger than we anticipated. And the second interesting thing is that money is going to get transferred to women because
Right.
women live longer. And so before it gets to the next gen, it's going to be transferred to women who live
True.
15 years longer. I'm just, I mean, this is like the territory of taking a completely wild guess. But in the case of faith-based funds, what do both of you think? Do you think women are more same, less likely to take it into consideration? Like, is this going to have any impact at all?
I think it should. It's a great observation, Julia, right? Because it is going to, the first big wealth transfer is going to hit women first, right?
Women
And
first. Yep.
I think the challenge is that so many of them are going to still use the existing infrastructure and advisors, and those advisors are still going to be, unless those advisors have adopted a new narrative, then they're going to kind of, the first question is going to be again, well, what's your risk reward tolerance profile, right? Like, so that's an educational piece, right? I think here's what we could say, because it's a great question. I think we could say that I believe that women will be more likely to pick up the mantle of this narrative and run with it than their deceased husbands, probably, right? Like, and with their kids, thinking about their kids. So I think they're a ready audience for this growth of this market. But so much of it's going to be determined because so many people just go with what their advisor, says, right? So, so to create the educational component that then has someone talk to their advisor and say, listen, I want you to look at these ETFs that are aligned with my, I think the other thing that's going to happen is I think we're going to see the growth of a lot of different vehicles that give us options that we just don't have today. I think we're going to see ETFs that, look at different issues and transcend religion, for example, and are more values-based. I think we're going to see the opportunity because the proliferation of data and AI to create indices that then fuel investment vehicles. So I think we're going to have a lot more options. I mean, I think music is going to be a really interesting asset class that is going to evolve and be democratized, right? Because we know the institutional investors and family offices are buying up catalogs, and they've been doing that for a long time. But we're starting to see it's a great asset class. It's non-correlated and it's like a bond, right? So
stream team ownership, right? The sports
team ownership's a great one. Yeah, huge.
Really uncorrelated, and yeah.
And
it's becoming a huge industry right now, just in the private equity taking over a lot of these sports teams and these leagues.
Yeah.
Right? Yep. Mm-hmm.
So, Julie, I'm curious though on your take on this on women, because it seems to me that women have had, in a lot of these family offices and foundations that I work with, I noticed that the women seem to have a very prominent role on the foundation side of things. They seem to have their stamp there in a lot of cases. And maybe that's true, maybe it's not, but it seems to be my experience and what I've seen. But I think David's spot on that it's going to be strengthened because there's a certain passion there that may be distracted for men a little bit more so than the women. But I'm curious to get your take on that and where you see women taking this with the foundations and how that translates into the investing side.
It's you know what? It's such a great question. I heard about this whole statistic and the new study and the fact that women are going to be taking over. I just heard about it like literally last week. And
yeah, I never thought of it that way. It's a great perspective.
So I was like, okay.
There's a lot of data.
There's a lot of data, but like sometimes people say it in very simple terms and it gets your mind going, and trying to figure out, okay, what is the impact of that, right? I think that some of these women are going to turn to their kids and say, here, listen, help me. Let's figure out a plan. Do we continue the way that we did? Do you know what I mean? There is going to be also a segment that is going to say, and we already see this, I'm going to shut down this family office completely. it's better that I just turn it over to someone who's going to manage it like 100% of it. Do you know what I mean? I don't want to deal with this. So, because we constantly talk about new family offices being started, but people don't talk as much about a lot of family offices being shut down and people exiting, right? Because they're like, okay, this is more complex than I expected. There are all these decisions that need to be made. There are all these risks that I need to understand. And honestly, like, do you really want to be there, right? Full time, trying to manage this whole thing. So I was thinking that there's going to be probably a segment of like super energetic women who are going to be like, okay, now I can make all these decisions and, enjoy making these decisions. And if you are offered like, okay, pick something and, what asset allocation do you want to have? What geographic allocation do you want to have versus faith-based? Faith-based kind of sounds more fun and friendly, right? If you're not an asset professional chief investment officer.
Mm-hmm.
Right.
You know what I'm saying? Like,
you're right. It's more approachable, right? Because you
can
be
more approachable, right?
Right. And the truth is, that's a ground that anybody, because it's so new, an advisor, it puts them on equal footing with an advisor, because then they can say, here's my faith. The advisor's going to say, okay, we got to figure this out, right?
Right. As opposed to, is it small cap, mutual fund? Is it large cap? Is it like,
yeah.
There's like, who knows, right? I mean, if you haven't dealt with that your entire life, right? And all of a sudden you're like facing these choices, what are you going to do? You're going to just defer them, or you're going to have to do a lot of reading on really not that interesting of information unless you love finance so much, and you've done this your entire life. So of course there are women who are exiting their own, hedge funds and venture funds, and they're going to love it and have a ball with that. But probably, most likely, they're going to run their own portfolios, and do you know what I mean? And just become more or less active investors. So yeah, it's interesting. This is why, David, when you mentioned it, and Matt, when you mentioned it, I was like, wow, this is new, and it doesn't feel as forced and as kind of, it's not as forced as ESG, in my opinion. Mm-hmm. Not that there's wrong with
it. That's a great way of putting it too, because ESG did feel very forced. I think a lot of people would agree with that.
Forced.
Maybe not everybody, but
yeah, that's a good point. That's a great. I think that's right.
A lot of people,
but when you talk about your faith, it's very personal. You're right, and it is much more personal, because how can you disagree with somebody's faith?
And you bringing it, right? Whereas ESG is like, you're supposed to feel elated about it because it's environment and it's social. And I don't know if anybody gets elated about governance. I do. Just like makes me happy. Probably in the minority there. You know what I mean? But like, you're supposed to feel so thrilled about it. But very few people, other than a few very, very large money managers, felt elated about it.
Right.
All right.
Well, plus it's never been fully defined. I mean, if we're being honest, it's never been fully defined in each piece what the E, the S, the G will really mean in terms of metrics and everything
venture
else.
people. No, on the public side, it's been thoroughly defined. On the venture side, a lot of venture funds will say, hey, I'm trying to figure out where I fall into this, on the, like, how do I create an ESG framework for venture funds? And it was never created. Have you noticed? It never got created. On the venture side, somehow, I don't know, maybe the market was too small for consultants to go in and like do anything there.
Well, I wonder if it may be because of lack of data. Because if you can't access all the information of the private markets instantly, like you can in the public markets, it's a lot harder to bracket things and put them in the right boxes, neat and tidy, like we have them.
But also think about what the tide. So you have ESG, and think about GameStop, right? So GameStop wasn't about faith. But underneath it all was a value, which was, we're going to control this, and
that's right.
Then so
well put.
It wasn't categorized as faith or religion, but it really underneath it was a very strong, passionate belief, right? and that rallied that community to drive and control. And so, it's there. The pieces are there, right? And then I like what you're saying, Julia, because we've got all these things converging right now, right? At this moment in time, which is, ESG has kicked up awareness. You've got the GameStop, you've got, everyone, the Teslaites or the Digerati, and then you've got next gen, and you've got this wealth transfer to women and next gen. And then you just have this underlying driver of, integrity is expressing and creating alignment for different parts of my life, and that I should be expressing that. And,
right.
It's it should be in the public square where, whereas you're right, generations past, it was kind of like, hey, we don't talk about religion and politics or dentistry. It was the third thing, right? But, and at the dinner table, and now it's much more integrated. So the pieces are kind of all falling into place to propel.
It's a new iteration of financial markets. This is why financial markets are so fascinating, right? It's like they pick up all the cultural trends. They get affected by technology, but they also pick up what's going on in society, and we incorporate that. When I went to business school, it was all about you run the corporation. It's a profit maximization specifically for shareholders. Do you remember? This was like, right? This was textbook. And then in the span of the last 30 years, that got transformed into, well, that's nonsense. We don't like that, right? Add ESG. And so it's very, very interesting how we can now use technology to even do more, right? Data, AI, all of these things are going to be at the service of this.
Okay, Julia, I've got to ask you about technology too, because I can't have an expert technologist here and not get into this question. But I do want to ask you about the ethics of AI and technology and where it's going, because you see the trends of where these things are going right now. And there's a lot of conversation about, will this replace humans? Will this dehumanize the person on the other end of it? All those kind of questions. And David, I know you've got ethical interpretations of all this too, so I'd love to hear your thoughts. But Julie, where do you see this going, and what are the ethical implications of that?
In terms of like the really big stuff, like enhanced human beings and all that, not my area of expertise. It's really scary, I think, and I try not to think about it. And that's kind of the territory that is more of David's. You really need to think, well, what is a human being? You know what I mean? And do you want to have enhanced abilities? And do you want to make that choice for your children? And God forbid we have to make that choice. I think it's terrible. And I don't want people to look like Borgs in Star Trek. But the more immediate choice that as a CTO, what you're looking at is that now we have these AI agents, right? So what you see with AI agents is you see specific use cases where you can train kind of like an AI agent and you can have that AI agent do the marketing for you, do research for you, do customer support for you. And that compresses the development cycle for technology significantly. And it allows you to scale up and run a company much, much easier and faster and cheaper. So the huge ethical question is, we're not going to need that many people to work in businesses. And that is, and when people say, oh, that's not going to happen, I don't think that they really think it through. Because if you can have your AI agent significantly cut down on your need for marketing people, research people, support people, operation people, technology people, you're cutting down. You know what I'm saying?
Mm-hmm.
So we're going to have that issue of what are these people going to do? And that to me is an ethical question. And as far as we're responsible for the citizens in our country and getting them the ability to do something.
And do you see a reasonable solution to that? The technology is inevitable. Do you think there's a reasonable solution to it?
I don't think that people understand how quickly this is going to be upon us, because right now, and by the way, if you think that like we are not going to get affected by that, like think about the venture capital firms, right, and how they're deploying money towards pre-seed, pure startups, pre-seed, right? So you're writing checks and you're expecting that your team is going to have 10 to 20 engineers, right? Like things like that. But in 1 to 2 years, your team is going to be 2-3 people. And they're not going to need as much in terms of investment. And you're going to be deploying money differently. And so a lot of venture funds are going to be that model is going to go out the window, right?
Right.
So
yeah, that's right. Yeah.
Right. So, okay. So now the question becomes, OMG, like we need completely different skill sets ourselves. Forget the next generation. Now we're talking about like this one, right? That wants to stay relevant. And I don't think that anyone is really, thinking through that at the, I think that people are thinking through that at the startup level. Maybe some people are thinking through it at the venture capital level. Who is thinking about it at the society level? I don't know. I've not seen anybody who's been really saying anything meaningful. Do you see what I'm saying? Like people usually,
really interesting.
People usually say like, oh, models are going to hallucinate. And, if you're relying on AI, you're sending in your resume and, AI is going to hallucinate. And, and that's how they define a lot of these types of issues, right? My point is that there's going to be nowhere to send the resume to. There's going to be like people who really master this, you know what I mean? And they're going to be teenagers who go into that and they're fearless. They start playing with AI agents and they're just going to start launching all these things. Do you know what I mean? And that's it. And like the rest of us are going to sit there and wonder what's hit us. So that to me is the bigger, like, practical issue.
Huh. And David, what are you thinking?
Larry.
Well, I mean, part of the challenge I think is like AI. We use AI as a blanket kind of. I mean, what part of it and what are we referring to, right? I mean, it's kind of hard. It's kind of like if we rewound to 2000 or 1995, right? As Netscape went public, when we were like, internet's going to replace jobs. People are going to get fired. No one shows up to a job interview going, I'm really proficient at the internet, right? Like, so in the beginning, we were all talking about AI, but it's a tool that's going to make, now, a couple of observations. Publicis just acquired a company, I think like last week or a week ago. And they were it was fascinating how they talked about, they addressed the issue of AI. They said, yes, it will replace jobs, but we're growing. So those people get reallocated to areas of growth, right? So the net will be, opportunities, right? I was listening to a podcast interview between Orrin Hoffman, who's the founder of SafeGraph, and LiveRamp on his show, World of DaaS, with the CEO of ZoomInfo, which is one of the only data companies to be, I think they're worth 18 billion right now. I don't know what the market cap is. They were talking about the fact that they use AI, but they still use humans. So humans always going to be in the loop, right? So I do think it's going to be one of the most significant technological shifts that we've ever seen. Yeah. I agree with that. And I think everybody said that. I think that skill sets around using AI, there's going to be growth. So companies that are growing and using AI are going to reallocate. I 100% agree with what you guys were saying about, there was an article in the New York Times last week about exactly that, right? the venture model is going to fundamentally be restructured because companies, the traditional venture model was you go in, you give a bunch of capital, and you scale up to 200 people. And I forget the name of the company they were interviewing, but he was saying, listen, I only need 50 and I don't need more, right? So, using AI, they're super efficient. They need less capital, and less capital means venture is going to be restructured. So we're going to see, I do agree that the traditional venture model is going to have to fundamentally pivot to smaller bets across a lot more companies, because companies are just not going to need that as much capital. And so, on the ethics of it, I do think, my background is in open source intelligence and data on individuals, right? So WealthX, we built the first and only, to this day, global SaaS-based open source intelligence dossier company, where our staff manually, still to this day, by the way, AI is not good enough to just pull data on an individual from every source. It's not there yet, or even map an individual in the relational network. So I think the human element will always still be there. I mean, Zoom Info still uses humans, even though they're like one of the biggest, unicorn billion-dollar companies, right? So, and so does Safecraft. So they're gathering data and using AI to scrape it, but they're still using humans, right? So, I think the companies, I think what Publicis said in their PR on their acquisition recently was the right thing, which is we're growing and we reallocate really top people to areas of growth, right? So, technology always increases productivity. So the question is, what do you do there, right? And productivity, I mean, the reason that's so good from a national level is productivity allows growth without inflation, right? It's the cure for growth. That's the very hard to do. If you're growing fast, then technology and increase in productivity is the way you resolve that tension, right? So that's why every emerging country wants to be the next Silicon Valley, right? So I think, but on the ethics side, if you have something that's gathering and centralizing, collecting so much information, I do think we need to be thinking carefully about the growth of autonomy of something like that. And we don't have enough time to get into it, but I think there's a fascinating discussion to be had about the spiritual dimension to algorithms, and the spiritual dimension and the moral dimension to AI, because if you look at some of the AIs are designed, right? So anyway, but I think I think those are conversations we're going to be having. And I think more and more corporations are going to be putting ethics guidelines in.
All right. So David, Julia, when you're looking at anything here for the future of family offices, ultra high net worth, and the convergence of tech, and now this movement toward faith alignment, what do you see coming in the next 5, 20, 50 years?
David, you first.
Go ahead, Julia. You
go ahead. I'm just gonna copy your. I'm just gonna rephrase your.
I think it's. Let me try to articulate quickly. I think the growth in AI and its ability to take unstructured data and create organizations, and I do think one of the most important skill sets that we're going to need as humans with AI and data and the proliferation of all those things is the ability to take frameworks that create meaning out of data. So I think that's and I think that's one of the things that Bountiful does is fascinating in terms of landscape. And as I think about just even what we did at WealthX, we took data and we created dossiers, but the dossier was a framework. It was an anatomy of an ultra high net worth individual. So I think that my point is that the data and AI is going to drive and fuel the ability to take all this data that we're creating unstructured and create things that then give us the ability to better be empowered and be better, have the ability, assuming there's the tools, and to align all parts of our life with our value system, right? So I think not just our investments, but what about my account with Netflix, and what about my account on Amazon? Everything will become an extension of who I am and the ability to use AI to drive that eventually, right? So I think that AI and data in its ability to really ingest and create meaning out of unstructured data will enable the ability for alignment of all parts of our life, including the financial markets. There you go.
I think that we're gonna also. I totally agree with you. This is this kind of customization, right? Is what people want because it reduces it makes you more productive. It reduces your transaction costs, right? It gets you to where you really want to go and what you want to do so much faster, right? Because it like eliminates all that noise. You have access to what you really want that represents your values and what you want. So that's one. I think that most likely, in addition to that, we're going to have a slew of technologies that will attempt to make people's lives easier because no matter how developed our tech is, when you're looking for a pediatrician replacement for your kid, because your pediatrician is traveling, you're still like, oh my God, it's manual. You have to call other moms and like figure out like who can you,
Right.
Like, in other words, yes, there's all this great tech. It doesn't necessarily alleviate your day-to-day hassles. I think that there's going to be like a drive to really make your life convenient, and people will pay for that.
Yeah.
Right. So that's going to be another like second trend. Let us identify that. The third trend that I see is I call it a modern family office, or is investment institutional grade family office. And I have a lot of keynotes around that because what I'm basically saying is you cannot do really cool stuff that's out there without having a really, really stable foundation and platform for it, right? Like it's hard to run a large language model on your data. If your data is all over the place, you can't even find it, you cannot secure it,
Right.
or cyber defense around it. You know what I mean? Like it just becomes like injection of data and hallucinating models, right? And drifting models. So basically, it's family offices that will want to remain really large single family offices or multi-family offices. They will become like mini JP Morgans and Goldman Sachs. Because at some point they're going to say either like get out of it or build it so that it's a real financial firm, financial service, like it's a real investment fund, right? With like other lifestyle enhancements, let's put it that way, right? So that is also going to happen. That's just what I see, because otherwise you cannot sustain that level of innovation without any governance or foundation.
Well, David, Juliet, thank you guys so much for taking this time with it. This is fun. I really enjoyed the conversation. I'm looking forward to it. Maybe next time, let's do it again.
Yeah, let's do it again.
We've certainly laid the foundation for it. So awesome. Thank you so much, guys.
Thanks, guys. Thank you.
We hope you have enjoyed this episode of The Alternative Investor. If you found this valuable, please be sure to like, subscribe, and share. This show is brought to you by Honey Hive Capital Partners. Visit us at honeyhivepartners.com to continue your alternative investment journey. This recording represents the views and opinions of its guests and does not reflect the views and opinions of Honey Hive Capital Partners, LLC. Nothing in this recording, nor any communications from it, should be treated as constituting financial, investment, legal, tax, or other advice of any kind, or as a recommendation to buy or sell an interest with respect to any investment. We look forward to you joining us next time.